R1 here, short of thrust and closes, huge volume, very good. Number two, spring. Yeah, I mean, again, it's not really the best penetration, is it? But technically, it is a spring. We could buy. We're in a trading range. Yeah, we are in a trading range, making lower highs. Okay. Reactions to support are getting weaker. So number three over here, selling's drying up. Yes, it is. So that's the volume from one. We're approaching here on three, and look at the volume. 2/3 less. Very interesting. I mean, the very next bar. Couldn't you be thinking of buying the very next bar over here? The bar after three. Yeah? So we calm down, we hold, we get very poor, and then what does that bar kind of represent with that volume? Twice the size of the spread, ease of movement. Yeah, good. And we have another buying bar to compare it to over here. Okay. Four, we break of resistance. Well, yeah, we do break through this little mini shelf. Five, back up to the edge of the creek. Missed his play. Oh, okay. This trader wasn't here. He's just coming into the market here. And that is what this trader's saying here is a little bit of causality, trading range. We break up, come down. This is the mini Buick. Everyone see it? Trading range, sign of strength, back up over here. And that is very nice, by the way. And I even like the bar before. Yeah, look, that's five. What's the bar before? Look at the volume. High volume. Look at the spread. Beautiful. So that's hidden buying, isn't it? It's effort versus result. And then we get lower volume and we engulf. Beautiful backup. That's a great entry here. But he did notice he missed this play. But the most important thing is that you recognized it. Well done. Part of trading is, and it's be able to prime your brain to seek the opportunity. That's part of the process. Six, price rejection. Buying is better than five. Indeed it is. Yeah. We come down, we price, and we can see objectively, slightly higher volume, a greater spread. Beautiful. Everyone see this entry over here? Wonderful. Analog wise, compare this bar. Let me clean this up. Comparing this bar to this bar. Fantastic. Seven, we would all buy over here at six. Now my question is, I think this person's been very modest. So he said it's a very good test. What do you make of this test, everyone? I would say it's probably, yeah, load the boat. It's an A-star test. It's an extremely low volume. There's no supply pressure. We don't put our heads above the bar and we don't retrace. Add. Beautiful, beautiful test. I would not expect this testing, by the way. I would not expect this market to come down and test again. Very good test. And then it comes up here. Oh, this is your actual chart that you traded. This is your entries. So he entered here, partial covered here. Now, who would partial cover up here? At 9. Yeah, I certainly would. And by the way, that's absolutely fantastic. 70 up to here. So that's 70 ticks. Brilliant. He made an observation, though, that the breakout is better than 8. And indeed it is. Look at that. We get the same volume. But look at the size of the spread over here to over 8. But it's not only the size of the spread that represents a little bit of ease of movement. If we compare this bar to this bar, wouldn't you say that the close is actually a little bit further away from the break of structure? So not only is it ease of movement, we're making better progress to the upside with lower volume, if that makes sense. 10, the breakout is improving. Yeah, once again, I mean, look, a very good break. There'll be a little zone up here. But what do we note this time, though? We got to compare the analogs. 10 to 9 to 8. 8, 9, 10. What do we see? Yeah, we have an extra 50% volume. So what does that mean, everyone? Well done, Ian. That means we have selling coming into the market. And we're trying to break out over here and we see some supply. You made the decision to cover. Okay, but you could also put a stop under here. Selling is expected, 100%. You have to understand at the same time at 40 up to here, that's another 35 ticks. Now this trade is 105 ticks on side. As we always say, we are breaking through resistance. on this bar with this high volume. But what could we make the assumption? Could we make the assumption that demand is overcoming supply here? Because we would expect to see selling here. So either A, would the room here think that this may be a little bit of a premature trade? Or, sorry, premature cover? Or do you think we should respect and move our stop under that bar? No, with that volume, I'm expecting a reaction or a trading range. At least the price is likely to come back and test that area. So you would cover. Partial cover there, Ian. Yeah, fantastic. Very good. Because we've made the assumption that here, oh, sorry, bear with me, that here at 8, here at 9, here at 10, the volume has doubled. It has doubled. And that means selling. But it can mean that is demand overcoming supply here? Again, discretionary, but the majority of people would cover here. But then at 11, what do we know? Huge amount of selling now, isn't there? Look at the spread. 2/3 of the size of the spread, increasing volume, and look how we close off the lows. So if you just think objectively, from close to close, we make that much progress on that volume. High volume, now we make that much progress. So if you think in those terms, we make a fifth of the progress to the upside with higher volume. Oh, what does that mean? Cover, tighten up. We're going to have a reaction. Where's it likely to react to, everyone? Even though we can see it react there, we would expect it to react there, wouldn't we? This is what we do, week in, week out. You know what impresses me the most about this chart? About your trade management. Although I know you sent me a message regarding you rather work on trade management than your entries, and I concur. Is that you didn't cover here? So, just could you tell us quickly why you didn't cover at this resistance level? What's your thought process here? Yes, good. Because you saw cause in the background. Yes, well done, everybody. Cause is just too close with the cause we have built. Yeah. Fantastic. But there's also one piece of information. Would you buy two? Would I buy two? No, I would not buy two. I'd buy this bar here after the very poor selling. And we spoke about that, represents ease of movement. Good to have that visual memory and these patterns in your chart books. The chart books, and essentially you have analogs of how the market turns. Yes, this does unfold. Okay, here's a question. There's a difference, okay? We can analog these bars, 1, 2, 3, as this trader has done over here, okay? However, this over here is slightly different. Why? Because of the volume. Agreed? And what does the market like to do when we have high volume? It likes to test. So that's why we get this. Over here, we don't really get the volume, and we kind of get the V spike in this instance, agreed? So that's the difference. So when we are analoging, you are seeing this. If you bear that in mind, if you see the high volume, we kind of get the same taking off point. Just bear in mind that it is likely to be tested. Same turn, in effect. This has high volume, needs to be tested. That's great for our trading mind, isn't it? So when you're trading over here, we don't see the high volume. We're not expecting a test. Therefore, we can kind of hold on a little bit longer, and we might need to be aggressive, etc. It's just a thought process that it provides us as traders. So